Let's talk about the story of your money. It really has two parts, right? There's the exciting part, how you grow it, and then there's the part we sometimes forget, how you protect it. And you absolutely need both for real financial security.
Okay, let me ask you something really simple, but it's a huge deal. If I offered you $1 right now, or that exact same dollar a year from now, which one are you taking? Now, I know, the answer seems obvious, but why you'd take it today, well, that's the secret sauce to building wealth.
Of course it is. $1 in your hand today is way more powerful than $1 you'll get tomorrow. And you know what? Really getting that simple fact is the difference between just putting money aside and actually building real, lasting wealth.
So what's the big secret? What's the superpower that today's dollar has? It's simple. You can put it to work. You can invest it. Time, my friends, becomes your best employee, making your money grow all on its own. This whole idea, it's called the time value of money.
Think of it like a time machine, but for your cash. We can jump forward and see what our money could grow into. That's what we call its future value. Or we can hit rewind and figure out what some future pile of cash is worth to us right now. That's its present value. Let's hit the fast forward button first.
So how does this growth thing actually happen? Is it magic? Well, not exactly, but it can sure feel like it. It's a force so powerful that Einstein himself supposedly called it the eighth wonder of the world. We're talking about compounding.
So, what is compounding? In the simplest terms, it's when your money starts having babies, and then those babies have babies. Your earnings start earning their own money. The classic way to think about it is like a tiny snowball at the top of a huge hill. At first, it's nothing, but as it rolls, it picks up more snow, gets bigger, moves faster, and pretty soon it's this unstoppable avalanche of wealth.
Okay, let's make this real. Look at this chart. You start with $1,000, earning 6%. After year one, you've got $1,060. Simple enough, right? $60. But look at year two. You don't just add another 60. It's more than that. Why? Because that first $60 you earned is also earning interest now. That tiny little extra bit, that's the magic. That's the spark that lights the fire of exponential growth.
Okay, so we've seen how money grows into the future. Pretty cool. But now, let's slam on the brakes and throw it in reverse. Let's answer that other question. If someone promises you money down the road, what's it really worth to you today? This is called discounting. Let's say your uncle promises to give you $5,000, but in 3 years. That's great, but it's not the same as having it in your pocket right now. If we could be earning that same 6%, that future $5,000 is only worth about $4,200 today. That $800 difference? That's the opportunity you're losing by waiting. It's proof that a bird in the hand is worth two in the bush, especially in finance.
Okay, building wealth, watching that snowball grow, it's awesome. It's the fun part. It's all offense, but it's only half the game. All that hard work, all that growth is just sitting there, totally vulnerable. You know, life has a funny way of throwing curveballs, and if you're not ready, one bad break can wipe you out completely. So now, we've got to switch from offense to defense. We need to talk about managing risk. So when a risk pops up, you've really only got 4 moves you can make. First, you can just avoid it. Don't want to risk a motorcycle accident? Don't buy a motorcycle. Simple. Second, you can reduce it. Okay, you bought the bike, so you wear a helmet and take safety courses. Third, you can retain it or just accept it. You set aside some cash for a flat tire because you can handle that. But for the huge, life-altering risks, the ones that could bankrupt you, for those, you make a fourth move. You transfer that risk to someone else. And guess what? That is exactly what insurance is for. Insurance is your financial shield. It's the armor you put on. You pay a little bit of money to have this massive wall of protection standing between your family and financial disaster. It's there for the big, scary, unpredictable stuff. So let's look at a couple of the most important pieces of that armor. All right, first up, life insurance. It basically comes in 2 main types, and they do 2 different jobs. First, there's term insurance. This is all about protecting your income while you're working and people depend on you. It's straightforward, it's usually pretty cheap, and it covers you for a specific period of time, or term. Then you have permanent insurance. This is for leaving a legacy, for making sure there's coverage for your entire life no matter what. It costs more because it lasts forever, and it even builds up a little savings account inside of it.
Now this next one. Honestly, it might be even more important than life insurance. It's disability insurance. Think about it. What's your biggest asset? It's not your house, it's not your car, it's your ability to get up every day and earn a paycheck. This insurance protects that. But you gotta watch the details. The absolute best kind covers your own occupation, meaning it pays you if you can't do your specific job, not just any old job. And you want to look for a policy that's non-cancelable. That means the insurance company can't just decide to drop you or jack up your rates. That's the gold standard.
Okay, so the big question is always, how much coverage do I actually need? It feels like a huge, scary number you have to pull out of thin air, but it's not. It's actually just a simple little bit of addition and subtraction. We're just going to figure out what your family would need and then take away what they've already got. First, let's add up everything your family would need to be okay. We're talking paying off the mortgage, any other big debts, covering final expenses, and, this is the big one, creating a pot of money to replace your paycheck. Let's just say for this example you add all that up and you land on $1.5 million. Okay, so that's the need. Now we just subtract what you already have in place to help cover that. So we're talking about your savings, any investments, maybe some life insurance you've got through work. Let's say you've got $300,000 in that bucket.
And there you have it. The difference between what's needed and what's there, that's your insurance need. In our case, $1.2 million. See? It's not a guess. It's not a scary number. It's a real calculation based on your life.
So you see how these two pieces fit together, right? We've got the time value of money. That's your offense. That's how you score points and build that big lead. And then you've got risk management, your insurance. That's your defense, making sure one unlucky hit doesn't knock you out of the game for good. And you absolutely cannot win without a great offense and a great defense. So if you remember one thing from all this, let it be this. Growth is your engine. Protection is your armor. A race car with a huge engine but no roll cage is just a death trap. And a tank with thick armor but no engine, well, it's just a statue. You need both, working together to get to the finish line. So I'll just leave you with this question to think about. Are you spending all your time building a bigger, faster engine while leaving it totally unprotected?